Live from Bloomberg's world headquarters in New York, I'm Katie Greifeld.
And I'm Tim Snyder. Welcome to Bloomberg Crypto. Look at this, new studio.
I feel like we're not supposed to be here, but this show is going to be here for the next couple of weeks.
Yeah, making some changes somewhere else. Those surprises to come, but hey, feels like home.
It feels like home. Stay tuned and don't go anywhere because the SEC, it paves the way for the eventual launch of the first U.S. ETFs investing directly in Ether. An unlikely turn of events compared to just a couple of weeks ago.
And ETNs, a link to Bitcoin and Ether, debuted today on the London Stock Exchange. Wisdom Tree, 21 shares, and Invesco among the approved issuers.
And we're going to talk about that debut with Ophelia Snyder from 21 shares, plus the next steps for U.S. Ether ETFs with Katherine Dowling from Bitwise.
All that ahead on Bloomberg Crypto over the next half hour. But first, here's a snapshot of the market. I do want to start with Ether, given the SEC action that we saw last week. We're going to have much more on that in just a moment. But Ether up about 3% over the last 7 days. Remember, it surged last Monday. That was ahead of the SEC signing off on a proposal to list products tied to Ether. And checking in on Bitcoin for the week, we can go ahead and call that 2%. It's actually moving today, believe it or not, on news tied to Mt. Gox. You remember Mt. Gox. It was once the world's biggest Bitcoin exchange, but it was hacked back in 2011. It went bankrupt back in 2014. Well, now traders are monitoring transfers by wallets belonging to the exchange. Those administrators have been trying to return $9 billion of Bitcoin to creditors.
So that's Bitcoin. Let's go back to Ether and the weekly change of Ether. Last week's developments with the SEC lifted the token to its best week in more than 3 years. As you can see behind me, we're talking about a jump of about 25%. That, again, the best week since 2021.
We'll take a look at the spread between implied volatility of Bitcoin and Ether. Investors clearly signaling much bigger swings in Ether than in Bitcoin in the coming months. Just a reminder, Ether up close to 70% so far this year, though unlike Bitcoin, which made new records earlier this year, Ether still hasn't surpassed those 2021 highs. Katie?
And as the SEC paves the way for Ether ETFs, today, the London Stock Exchange debuted a batch of exchange-traded notes that are linked to Bitcoin and Ether. We're going to discuss both of these topics with Bloomberg's Emily Griffeo here in New York and Emily Nicole in London. We got both the Emilys for this block. So I'm going to start with Emily Griffeo in New York. Let's talk about Ether and what happened last week with the SEC, because it wasn't full approval. What was it?
That's right. So in order for the Ether ETFs to actually begin trading on exchanges and investors to be able to purchase them, the regulator has to sign off on 2 separate filings. So the approval of one of the filings that we saw last week, known as the 19B4 forms, necessary but not sufficient. We still have to see the regulator sign off on a form known as S1. This is a prospectus filing that the issuer themselves files. It has all information about the fund, risk disclosures. Unlike the first batch of these papers that we saw approved last week, the S1s don't have a deadline. So the SEC doesn't have a certain date that they have to make a statement on these funds. So we might be waiting for days, weeks, or even months for that next step before the funds actually begin trading.
Well, that's my next question, Emily Griffeo, is about that timeline here. Because if the SEC doesn't necessarily have a deadline, what are the folks on the other side who are waiting for this approval? What's their timeline?
So
and can we look to what happened with Bitcoin a few months ago for any sort of guidance?
Well, it was different with Bitcoin because with the Bitcoin ETFs, we actually saw the regulator sign off on both of the forms at the same time. And that's why the funds started trading right after we had that announcement that, oh, they're approved, and then they started trading the next day. For the S1, it's actually now up to the issuers. How quickly can they get their paperwork in, and then how quickly can the SEC sign off on it? With a lot of these issuers, they actually weren't very prepared for the 19B4s to be approved as they were. And so now some issuers are saying, well, I'm not as prepared to get my S1 ready. I have to be scrambling. Others are saying, we knew all along. We suspected that they were going to be approved. We were operating like that. So we're ready. So the SEC could technically approve some S1s before others, maybe if those firms are ready. But that's, I mean, it's all up in the air. We'll have to see. They'll likely just approve everything all at once. But again, we really don't know. I've spoken to some lawyers trying to nail down, like, really, how long, like, when am I going to have to write my next article on this? And they said, we really don't know, days, weeks, or months.
Well, it really was a stunning turn of events. I know that last week was such a scramble for reporters, but also for issuers as well. So that's the U.S. side. Let's talk about what's going on with the London Stock Exchange, Emily Nicole. So we're talking about the first day of trading for physically backed Bitcoin and Ether exchange traded notes. These are only for professional investors. Talk us through how this is different from what we're seeing stateside.
So in the US, it was a pretty big deal when Bitcoin ETFs got approved back in January. It was kind of a heraldic moment, a really big moment for the industry. But in Europe, we've had crypto ETPs for going on 5 years, even more. So it's really been a really long time that this has been coming to London. Issuers over here have been lobbying to get this done in the UK for quite some time. And it almost came as a bit of surprise in March when the regulator finally said, OK, maybe you can do this just for professionals. So it's been a long time coming. But the issuers themselves, they only had a few weeks to get ready as well. So it's been scrambling on both sides of the pond.
What do we expect in terms of flows, Emily Nicole?
Well, because it's professional investors only, we're really not expecting a whole lot. Some of the issuers I've spoken to have said we don't expect to see any of our clients move their holdings over from Europe to London because, they're professionals. This is what they do. They're used to it. They don't need to have things in London or Europe or wherever. And so because of that, we're really not expecting to see a whole lot of flows going into these products. But, it's a stepping stone, right? And if these things go without a hitch and they get to see some sort of flow, some sort of demand, perhaps that'll give the issuers a case to make to the regulator to say you should be opening these up to retail investors too.
Well, that's exactly what we're going to be talking about with our next guest. A big thank you to Emily Griffeo and Emily Nicole. One Emily here in New York, one over there in London. Really appreciate you joining us this afternoon. Joining us now is one of those filers, 21 Shares president and co-founder Ophelia Snyder. Ophelia, a big week for 21 Shares, the SEC paving the way for the eventual launch of the first U.S. Ether ETFs. And then the news that we've been mentioning throughout the program today. Today, the London Stock Exchange debuting that batch of exchange-traded notes linked to Bitcoin and Ether. Explain to me the context here and sort of where you think we are when it comes to the cryptocurrency universe. What does this moment mean to you at 21 Shares?
So there's been a really big change in global momentum over the last few weeks. The FCA in the UK moved forward with approving our application for both spot Bitcoin and spot ETH ETPs on the London Stock Exchange last week. And not even 24 hours later, the SEC moved on our spot application here in the US, which is, needless to say, quite interesting. And it really shows there's a global momentum around crypto as an asset class. We've obviously been managing physically backed crypto ETPs in the US, in Europe, and also in Australia over the last 6 years. We launched in Australia in 2022, and so there's obviously been quite a bit of press recently also about movements in Australia and approvals by the ASX. As this type of issuer, we've been the first mover in this category for a long time, and our conviction that crypto is the future remains as true today as it was then. And really, our mission is to build products that would let people like my mom buy crypto, and we haven't really deviated from that at all. And the momentum over the last couple of weeks has been really exciting to see, and it's remarkable to see such consistency across different markets.
Well, let's talk about the momentum in the U.S. As we were just discussing with our Emilys, it was quite a reversal that we saw last week when it came to really the temperature around U.S. spot Ether ETFs. And again, it's anyone's guess when we actually will get the full approval and the listing of these products. But from where you sit right now, what's your best estimation of when that might be?
It's really hard to say. This is very much a day-by-day, minute-by-minute process, and that's actually quite unique to the U.S. And we typically see when any movement happens in a very public way, and that's completely different than the rest of the world. And it can sometimes give this impression that movement is coming out of nowhere because of just the nature of the way those communications work. But people have been working on, with the U.S. regulators for a long time, and I mean, we've certainly been doing that for as long as the company's been alive. More than a half a dozen years now across different administrations and different regulators. I think it's slowly building to where we are today. It's hard to say, and the Emilys, as you put it, are right, and to say exactly what that timeline looks like because you're not falling back on statutory timelines in the same way you do with a 19b4. But I think there's been a lot of really interesting movement and a lot of progress over many years to get to this point. It's not dissimilar in some respects from the conversations that have been had around spot Bitcoin products.
Hey, Ophelia, I want to go back to something that you said just a couple of minutes ago. You mentioned the idea of your mom buying crypto. And it made me think, should our moms really be buying crypto? Is that responsible?
Is crypto for moms?
Is crypto for everyone?
Yes, yes, it most certainly is. And I have the interesting honor of having been actually introduced to crypto by my mom. So my mom's the one who actually first talked to me about crypto in 2013. And it's really interesting when you talk to her about why. This is obviously, yes, this is higher volatility than, potentially buying debt instruments. But that being said, it certainly has a place in people's portfolios, and it has a place for people to make responsible investment decisions in the sector. My mom is a great example of that. She actually gave an interview recently talking about how she got into the space for the first time. And it was really fascinating because the promise of technology especially in the context of like multi-generational planning, in the context of retirement planning, in the context of like the planning of your financial life, is really interesting and really impactful for people. And so we're really of the belief that opportunity in crypto really is for everyone.
There you go. And your mom obviously being a great example of that. Unfortunately, we only have about a minute left with you, but I did want to ask, when it comes to US Ether, the spot Ether ETFs, when might we see options start trading on those funds?
So we still don't have options actually trading on the Bitcoin products, right? That's a separate regulatory process. And I think that's going to continue to move forward as discussions with regulators advance. I would expect to see them hopefully soon, but it's difficult to give an estimate at this point in time.
Yeah, good reminder that we don't have options on those spot Bitcoin products. Really interesting, since they were very quick to list with the Bitcoin futures ETFs, not yet with the spot ones. Ophelia, always great to speak to you. Really appreciate your time. That is 21 Shares President and co-founder Ophelia Snyder. Now coming up, we'll speak to Bitwise Chief Compliance Officer Katherine Dowling on her company's plans with the anticipated Ether ETF approval.
And a bill establishing a crypto regulatory framework heads to the Senate with plenty of critics, but lobbyists see major progress in both chambers. This is Bloomberg. Welcome back to Bloomberg Crypto. We'll continue on Ether ETF approval. Katherine Dowling is Chief Compliance Officer for Bitwise. It's one of the issuers seeking approval from the SEC to list an Ether ETF. Katherine, good to see you this afternoon. Just give us an idea of the types of conversations that you've had with regulators over the past few months, as we got to that moment last week where we saw that the SEC is paving the way for approval.
Yes, and thanks so much for having me. Over the last few months, most of us thought that this was dead in the water, that the spot Ether ETF applications were going to be ignored because there were no signs of life, really. So I think that's why you saw very low percentages in approval. What we've seen in the last 2 weeks is really a tectonic shift emanating from Washington around the dialogue with regard to crypto. And that's where we saw last week the approval order come over, and you saw the public filings on the what's known as the 19b4 side of the House, showing that there is, in fact, life out there for these products, which is great to see. Couple that with the movement we've seen in both houses of Congress, and it's really great to see this much momentum behind looking at both market structure and a repeal of a pretty questionable staff accounting bulletin that was anti-crypto at heart.
Well, just to meditate on the spot Ether conversation a little bit longer, I think a lot of people were shocked to see this turnaround. I mean, like you said, people were looking at this pretty much as dead in the water. A lot of folks, especially on Twitter, have said that this was entirely political. This was a politically motivated change. I'm curious for your take on that and what actually did change that we did have this reversal.
I would absolutely agree that some political wins headed in and helped in the crypto direction. I think in a presidential election year where you have two candidates who the boomer lines are probably pretty defined, but both of them are looking at what's going to move the voter. And it's become clear that crypto, believe it or not, is going to be a factor in this election. You saw Trump come out really strong over the weekend, making very pro-crypto statements. And now if one of them can grab that crypto brass ring, it's really going to help them in those swing states where crypto becomes more of a factor. So I do think that political wind is really impacting the views the candidates are taking. And if you also just look at the tenor of the message that the Biden administration sent prior to the repeal of SAB 121, it was a threatened veto. And we'll see if that takes place, because May 28th is the big day to see whether the Biden administration goes through with that. Compare that to the staff administration policy that was released prior to the vote on Fit 21. The language was much more, we're going to work with the crypto industry. It was still opposed, but it wasn't as threatening as we saw in the language that came out with the pre-veto statement prior, just a week earlier.
Which of the mainstream political candidates, in your opinion, are better for the crypto industry? Is it current President Joe Biden or former President Donald Trump?
Well, currently, if you look back in time from now, the Republicans have been much friendlier to crypto. The Republicans have taken the tact of, we're pushing business offshores, we need to keep this business onshore, and that is 100% correct, because we not only lose businesses, but we also can create a national security issue by pushing all of this business offshore. As a former federal prosecutor, I can tell you it's much harder to look into these businesses and to find out what's going on if they're not on our shores. But if we can see a movement in the Democratic side, if there's more of an embrace of crypto, that could also move in positive direction. So historically, it's been a much friendlier crypto stance that we're seeing from the Republican Party, but that could shift depending on who comes into the various roles that are key for policymaking in the U.S.
And it'll be fascinating to see how these conversations intensify as we get closer and closer to November. But just to talk about this bill that was passed in the House last week, I mean, what are the odds of it actually becoming law, though?
Unfortunately, the odds are low. We're losing daylight on hours in Congress because of its election year. So we don't have that much more time before the end of the year. But stranger things have happened. It could be tagged on to other bills. But I think the important aspect is that we're seeing bipartisan movement towards embracing the fact of the need for market structure. We've had enough of this CFTC versus SEC capture the flag jurisdictional bingo. We need to move forward and actually delineate who's in charge. We need to set out simple things like definitionally how we define different aspects of digital asset. And we have to stop relying on case law that was around and made when Biden was a toddler. So it's time now to move forward with market structure. And what we're seeing is an embrace across both sides, both parties, of that necessity. And that in and of itself is a win.
Well, Katherine, it's great to get your perspective. Really appreciate your time. Our thanks, of course, to Katherine Dowling, the Chief Compliance Officer for Bitwise. Now, coming up, as we were just discussing, the House passing a digital asset infrastructure bill, but faces tough odds in the Senate and in the White House. Details next. This is Bloomberg.
President Biden himself, in their executive order and in the Financial Stability Oversight Council's report, says there's a regulatory gap between commodities, securities, and how to do this in the right way. And they argue that it should have been a legislative solution. So I do think we've taken the right direction to have a legislative solution, and that perhaps neither Chairman Gensler at the SEC and certainly Chairman Benham at the CFTC could not really do it in a full, effective way without legislation.
And that was Representative French Hill recently on Bloomberg. And remember, last week, the House advanced sweeping cryptocurrency legislation with bipartisan support. But critics, including the White House, opposed the bill, saying that it's too friendly to the industry. Bloomberg Industry Group reporter Kate Ackley has been following and joins us now. And Kate, give us some of the details of this bill. How significant is it?
Well, this is really the first time that there's legislation setting out a regulatory framework for crypto. So it's very significant. This is many years in the making. It's a big priority of House Financial Services Chairman Patrick McHenry, who is not running for re-election. So this is his last Congress. So this is kind of an opportunity for him to put his stamp on the crypto regulatory framework, perhaps even after he leaves office.
Hey, Kate, I'm curious about your thoughts on the crypto influence making and lobbying operation, because it seems like article after article that I read talks a lot about how it's really crypto's lobbying moment in Washington. Talk a little bit about that.
Well, this is an industry that obviously is new and has, sort of been growing up quickly in basically the past year. I mean, there was all of the fallout from Sam Bankman-Fried, who was kind of his own sort of, super PAC, if you will, and trying to push candidates in support of the industry. It's gotten a lot more professionalized now, and it looks like, dare I say, old-fashioned industries when it comes to its influence approach. It has, the companies have in-house lobbyists. There are a couple of trade associations that have started to stand up and really advocate for the industry in a much more formalized and professional way. And of course, I think, we have to take note of the sort of crypto voters, if you will, the people that, crypto is an important factor. Maybe they're single issue voters, but certainly that's an issue that they will vote on. And I think that's part of why you're seeing the support in Congress increase, because, you talk to members, you talk to people like Financial Services Chairman Patrick McHenry, and he says, there are now crypto voters and they're organized. Some of that has been in working with the industry, but some of it is just people rising up and saying they care about these issues.
All right, Kate, really appreciate your reporting there. That is Bloomberg's Kate Atclay. And really quickly elsewhere in crypto, Ryan Salem, he is the former chief executive of FTX's Bahamas subsidiary. He was ordered to spend 7.5 years in prison, appearing earlier in a Manhattan courtroom today. And it's the first of Sam Bankman-Fried's close associates to be sentenced in the wake of the cryptocurrency exchange's implosion.
Also, one more thing before we go. The Shiba Inu behind the Doge meme has died after 14 years of internet fame. Her photo was the face of the meme coin, worth almost $90 billion at its peak. Rest in peace.
What a nice note to end the show on. That's all for Bloomberg Crypto. Join us again next week. This is Bloomberg.